Good morning, everybody. It's July 29th, 2003, and it's the Wall Street Weekly Wrap-Up, and I'm John Newquist, your host. And we got a earnings juggernaut week, so we have a lot of big cases to talk about. Let's get into it. First of all, the big one is Microsoft, number 2 in the market cap. Great earnings, $2.69 a share, revenues 8.3. That's, I was amazed. Now, you have to remember, Apple lost money. This is the second largest company, and it went up 8%. So if you have a tech company and it's not going up 8%, that's not good, because they have to be better than Microsoft's 8.3%. Azure Cloud, they're doing good. It's going up. It's not going up 40, 50% like it used to be, but it's going good. Office, everybody is upset, and the reason it went down is they want to know how AI is going to be monetized in Office, and they didn't get the details, so people are upset. But it's in the positive channel, I mean, this, you forget it. Let's say they didn't even talk about it. This is a good quarter. This is a quarter. This company makes billions of dollars. I mean, you can't beat that. And of course, Google, another positive up channel. I mean, this is what you want in stocks. This makes it easy. You just watch it. It breaks through the down channel. You might want to take some off the table if you think things have changed. I always watch the earnings, because the earnings are a tip-off that the stuff is not going good. Revenue is 7.1%. Search is going good. YouTube ads increased. Advertised spending had been going down. It had been slowed up a little bit. So now that it's going up, and YouTube is good. I mean, I use YouTube every day. A lot of stuff going on there. All creator content. Doesn't cost YouTube anything. And that's very big. You're not paying millions upon millions for stuff that may not be a hit. Cloud revenue, 27%. So why it's important? 26, 27, pretty close growth, And the stats of the week: crude, boy, $80 a barrel. It broke it. Remember, we were at 60s just a few weeks ago, and the basis point, almost up 5%. People are getting almost 5% on these short-term loans, and that's not bad money. I mean, if you had $10,000, you're gonna have $490. That's not so bad. That's not so bad. I mean, this is where people are starting to look at it. I've made a lot of money in the stock market. I don't think it'll go up. I don't think that's the right thinking. Again, I'm thinking a crash late September, October. Fed meeting October, late September. So that could be the trigger. And I'm thinking at least a 10% correction. So that's what everybody's bracing for. Natural gas still in the under 3. That's good. Plenty of gas, like Chevron said. Gold's still in the 1900s, and silver's in the 24s. I just look at this orange juice chart. Holy smokes! I mean, if you find out oranges are very expensive, this is why. Because this is a commodity that has really just gone up. The heat has messed up the crop. Shortages, deliveries high, gas is high. I mean, I watched the gasoline prices go up 30 cents this week alone. Why? Because we're at $80 a barrel. So that's going to cause a lot of pressure. And there's no more strategic oil reserve to sit there and make it go lower. I mean, not really. And our composites, NASDAQ's still in the 30%. The one we always benchmark is 19%. Now we're about, I only do it every quarter, but we're probably 7% above it, 10% above it. I mean, it's been a great year. A great year. The Nikkei out of Japan. I've been watching this thing for 30 some plus years. I mean, I remember when it was a parabolic ski slope down, and now we're starting to get up. We hit a couple double tops, but the trend is upward. And the Japanese stocks could be something to watch if you're interested. And that's an area I watch all the different countries, so I think we're going to see a breakout. And then NextEra. Any of the utilities has been a dog. I mean, everybody's chasing the tech, so the utilities take the brunt. And again, in a bad climate, utilities and energy are the areas you want to go in. They had their run. NextEra has been in a long downtrend. We're still holding it because we're not going to pay the capital gains tax, and we're going to be in utilities anyway, and so they're doing good. The big thing, they're making earnings. They're not losing money. They got the revenues. Big beat on the revenues. That's what I want to see in a utility company. They're doing well. They added a lot more renewables. They do all the things with solar and wind towers and everything else. So I think it's it's going to come up. It's just that you're in a utility. You're diversified. Not every sector goes up, and you're just going to have to put up with Nextera kind of fluttering down in there and kind of just lagging there, but it'll come around. Snap is one we sold, and it comes down to this. Revenues fell. This is no good. Remember, we're holding Microsoft 8%. If you lost money, I could understand it if the revenues were good, because they were profitable last quarter. So, you can see it gap down. And of course, we're selling down at the gap, but, we're down here when we bought it. So we're good. Gets down to $8 again. We're going to think about it. The thing is, everybody's looking at is why is the cost going up? It's cost AI. They're proud of their chat AI on Snap, and it's good. I like it. I think it's good, but it costs money to maintain it and expand it, make it more accurate, and that's going to be in there. I mean, Snap is missing the ball. I mean, Microsoft with the Reels is going to take it on Instagram with Meta. I mean, this is so easy to do. Next thing you know, you look at one reel, next thing you know, you're looking at 50 of them. And that's what people want, eyeballs. Snap can easily do this. They got to encourage and start paying some of these people to put the best reels up on Snapchat, and they got it. I mean, there's 3 or 4 people I follow, but they're not that good, not compared to the Instagram TikTokers. And Splunk, we added to it. Splunk is a company that does a lot of stuff for data analysis, and I think a multiple top. It's an uptrend. It's got 3 hits. It's down a little bit. Earnings, August 23rd. Good time to buy. I doubt it breaks the below line. I'm expecting a beat on the earnings and revenues, so I think we bust out over there. And you can look at this 200-day moving average. We were way up there. So there's a lot of upside on Splunk, and it's just something I think. Like I said, we sold Snap. We're going to kind of still overweight the tech stocks and communication services, and I think this is a definite company that is doing well. And I thought the earnings, they guided last time above consensus, and if you would have bought around May, you would have done well, So, but I think it's a good stock. Meta, wow, revenues low 11%. So here we are, 8, 7, 11. These are the AI 8. I'm telling you, they're good. Look at the earnings. Holy smokes. 3.8 billion people use an app every month. I'm telling you what, these things with across the globe on Instagram Reels, it's just amazing. I mean, I always used to say Instagram was kind of like, let's see the nice photo of the day, from you. Now everybody, you got all these, young generation making these little videos to every dance song, and and then I got UFC fighters I follow, and that's how I find out if they're actually working out or they're just fooling around and buying cars and showing how much money they got. I mean, I want to see him work out. So I think Meta's doing good. I mean, I think he's got it. He's locked on. I mean, look at this chart. This is a classic great bull chart, and we're not going to sell it. Fed again raised the rates. We're not bad. I mean, I've been through this period. I bought a house in this period. It's going up, but it's 3%. That's not so bad. I remember 5% inflation. I remember 10. I remember 19%. When it got really crazy. ExxonMobil, that's one of our 2 energy stocks. Record demand for oil. Wow, look at $80 a barrel. Record demand. So what does that mean? It's going to go up. It's been in a channel here. Which way is it going to break? Boy, I don't know. But I'm telling you what, this pop in 30 cents, that means that's going to go up. People are going to figure out they're going to make more money. And they make a lot of money. They're going to give back $32 billion of shares. That's a lot of money. A lot of money. $32 billion. Some companies don't even make that or gross that. That's what they're going to give back to the shareholders. So good earnings. Revenues went down, of course. Oil went down, compared to a year ago. So, we're down 35% from a year ago. So that's why 28%, that's not unusual. WPC are one of our real estate sectors, I just thought it was pretty good. Look at the revenue jump. Man, they did pretty good. I mean, they got 97% sales. They got strong markets, diversified over, several different cities. So I think they're doing well. And is it stock? Well, every REIT is down. All of them. The interest rates going down. But if we stop, this will stabilize, and then once it gets cut, it's going to start going back up. And when would you want to buy it? Well, we're in it. We're diversified. That's part of that S&P strategy. We're trying to beat the S&P, so we're going to be in all the sectors. We're not going to have the REITs run up and we're just out of it. We're going to be in every sector no matter what. And that takes, some people said you can time it. And I says, well, you can, but some people, I've just learned, just beat the S&P, you'll be good. And again, we sold Snap, we added Splunk. Barron's came out this week. Buy Disney. Okay, here's the 200-day moving average. It's off the chart. It's not even at 120. It was way higher. And it's coming down, and it's right here. Where's the stock price? Right down here. I'm not too fan of it. A lot of ugliness down in Florida between him and the governor, and Iger and the governor, and the strike is not going to help Disney. And they're pushing back some of the Marvel accolades. The park season's going to start to slow down pretty soon, and once school gets back to there, so it could be a pretty tough quarter next quarter. And I figure the revenues of the parks are going to do well, but the cable service, holy smokes, what a mess. ESPN's a mess. Disney's a mess. I think ESPN's trying to get somebody to, like NFL, baseball, somebody to partner with them so they can get sports, because sports is a magnet for money. But here's our triangle. Descending triangle broke below. That's your signal. Don't buy. Let it let it get one of the lines, the 50-day moving average, or the 20-day moving average above the 200-day. You can't do it. I mean, if you bought it here, you would have sold it right over here when the drop, and you would have lost some money. But there's no saying that it can't drop again. So be careful. We looked at it. We chose Splunk instead. So have a good week. Stay cool. Hopefully the heat was over for us in the Midwest, and I'll see you next week. Thank you.